Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 15th, 2025, and we're diving into Citigroup's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Citigroup's performance, especially given the strong results they've reported this quarter.
Revenue and profitability overview. Let's start with the top line. Citigroup reported a net revenue of $21.7 billion for the second quarter of 2025, which is an 8% increase compared to last year. John, can you elaborate on what drove this growth?
Absolutely. The revenue growth was primarily driven by strong performances across Citigroup's 5 interconnected businesses. Notably, their markets division had its best second quarter since 2020, and banking revenues were up 18%. This broad-based growth highlights Citigroup's ability to capitalize on market opportunities and drive higher returns.
And what about profitability? How did Citigroup fare in terms of net income and earnings per share?
Citigroup's net income for the quarter was $4.0 billion, up from $3.2 billion in the same period last year. This resulted in an adjusted earnings per share of $1.96, which is a significant increase from $1.52 per share last year. The higher net income was driven by increased revenues, although it was partially offset by higher costs of credit and operating expenses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.61 based on a survey of 8 analysts. Citigroup reported an adjusted EPS of $1.96, significantly beating expectations. John, what does this tell us about Citigroup's performance?
This is indeed a strong beat, with Citigroup exceeding the forecast by 35 cents. It indicates that the company is not only managing its operations efficiently, but also capitalizing on market conditions better than anticipated. This kind of performance can boost investor confidence and potentially lead to upward revisions in future earnings estimates.
Operational efficiencies and future outlook. Citigroup's operating expenses were reported at $13.6 billion, with a cost of credit at $2.9 billion. How is the company managing these costs, and what does the future outlook look like?
Operating expenses increased by 2%, driven by higher compensation and benefits expenses. However, Citigroup is actively working on streamlining processes and driving automation, which should help manage costs in the long run. CEO Jane Fraser emphasized that the strong results are sustainable and that the company is on track to achieve a 10 to 11% ROTE target next year, which is promising for long-term growth.
Strategic initiatives and market position. Citigroup returned approximately $3.1 billion to shareholders through dividends and share repurchases. How does this align with their strategic initiatives?
Returning capital to shareholders is a key part of Citigroup's strategy to enhance shareholder value. The $2 billion in share repurchases is part of their $20 billion repurchase plan, which reflects confidence in their financial position. Additionally, the increase in book value per share to $106.94 and tangible book value per share to $94.66 indicates strong underlying financial health.
Key takeaways. In summary, Citigroup has delivered a robust performance this quarter, with significant revenue growth and a strong beat on EPS expectations. Their strategic initiatives and capital return plans are well aligned with their long-term goals. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Citigroup's impressive results.
Thank you to our viewers for watching. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Citigroup's performance in the comments below.